The conversations continue here in Davos 2025, and it is my pleasure to welcome back on CNBC-TV18 the global CEO of Honeywell, Vimal Kapur. Vimal, what an absolute joy to have you back here with us. Let me start by asking you about the outlook for 2025 in the context of everything that's going on in the US with the Trump administration.
Yeah, I would say, the way companies like us look at 25, start of the year, it looks more like 24.
So more of the same?
More of the same. I mean, the economic cycle, inflation is easing, so that's a bit of a positive news. There is expectation interest rate will keep easing off, which drives more economic activity in the US in particular. Hopefully the wars become less intense and that creates more opportunities for us. But I think overall, if you see GDP as an indicator of economic growth, the projections for 2025 and 2024 are not too different. So we're expecting the year to be slightly better, but we'll have to see how things pan out over the next 12 months.
What are you hearing from your clients? What are they telling you in terms of spends, in terms of investments? There was a pause on account of the elections. Now that that is over and done with, and the fact that, global growth is expected at about 3.3%, what are you hearing from people at this point in time?
I mean, it depends on which country you go, right?
The US specifically?
US in particular, I would say the spend is much heavier on anything to do with AI and therefore data center and therefore utilities. I think that continues. I mean, we don't see any change in that. But if you pivot towards India and the manufacturing spend there just on electronics, on semiconductor manufacturing, we hear a lot more of that versus, traditional way. So I think the themes change where you go. But overall basis, I think I remain optimistic that world is going to spend more money in 25 versus 24.
Let's talk about India since you brought that up. What's the view, the Honeywell view on India, and how do you see the next few years playing out for you? You've got a large presence there, large operations there.
We continue to do well. I would say, always look at India into three buckets. The domestic business, our global capability center, and then sourcing from India. Like we have three different things. We've been there for like 40 years, so our maturity in each one of them is different. Our domestic business is doing extremely well. Can't be more pleased in terms of opportunities in India and how we're working in all the three segments we serve, aerospace, energy, and infrastructure, they're all relevant for India. So we do there naturally well. Our global operations are very mature. Overall, our headcount in India is more than 14,000 people, mostly engineers, so that gives you the scale we have. The new news I have is more around sourcing from India. We did not do that, a lot of it, because India had competition. But I think last 2 years, story of India on Made in India is actually holding. And companies like us believe now it's a place to seriously look at it from a sourcing perspective. Now, when I say sourcing, it's really looking at more complicated mechanical components which we use into our products. So aerospace, for example, is our largest segment. And we barely source anything from India, but we can do hundreds of millions of dollars. It means we have to do a supply-based development locally, and that's what we are doing right now. We're looking at a lot of companies and essentially growing an automotive supplier to an aerospace supplier. That's how these industries work. So I see that's the next way for companies like us. We do a lot of domestic business. We leverage a lot of global capability center and now really leverage it for global sourcing.
And I want to pick up on that idea of global sourcing and where you find yourselves today to create this ecosystem as far as catering to the aerospace business is concerned, because we've seen others do it. I mean, Boeing, Airbus, they do have
early days, I would say. I mean, if you do it at scale, the good news is the aerospace industry is very narrow. I mean, Boeing, Airbus are the airframers or OEMs. We are the tier 1 providers to them. All of us basically need the same supply base at the end of the day. So what we will develop will benefit our peers or our customers. So I think it's early innings at this point to look at some of the more complex products, certification process. And we've been working it since 2024. And looking with government opportunities on incentives and others to kind of accelerate this process.
So what's changed? You said that, the last 2 years...
the capabilities are improving. I think the driver for that is as the defense sector emphasis has been growing, domestically, that creates a supply base to serve that, and that supply base becomes attractive for us. So I think that whole Made in India is becoming more relevant. And I think we can experience it.
And this focus on Indianization, which is a stated objective of the government in the defense sector.
Absolutely, it's win-win, right? So more we buy, more capable they'll become. They'll be able to serve defense sector even better. So I guess it's a win-win because we will drive more supply-based development, more productivity, they will learn from companies like us able to serve domestic industry better. So it's a great story which is building up.
On the first two buckets that you also spoke of, as far as the domestic side of the business is concerned, what are you hearing from clients at this point in time in terms of investments?
Positive, I would say, across the board, all the big customers we serve, and even the government sector. I think we clearly see a lot more investment in infrastructure segment.
The government's been doing the heavy lifting there.
Absolutely, building up. We clearly see, for example, big build out of hospitals, and we do automation system for hospitals. I mean, clearly we can see it's probably way bigger than what it used to be 3 or 4 years back. Or build out of data center is really definitely picking up. Or investment in energy sector is growing even more. Or the electronics segment, new investments coming. So yeah, absolutely. I think we absolutely see rate of change has grown more compared to what it was. And I don't see any reason companies like us should not grow double-digit here for next several years.
And double-digit growth in India, is it still your fastest growing market?
It is, one of our fastest growing market. Our base is very large. We probably, we want to be $1 billion domestic revenue in 2025. Let's see if we can achieve that.
Well, that's a milestone that you've set for yourself. So $1 billion in the domestic business by 2025.
Yeah, I think we should have a shot to get that. And I think with every momentum of how the activity is going, I think we should be able to accomplish that.
What about the other growth regions that Honeywell is focused on outside of India? How are they doing?
I would say, the activity in Middle East in particular continues to be strong. Saudi Arabia is differentiating itself as a market. UAE, of course, we were always present in a big way. Qatar. So I think the Middle East whole energy segment, investments in that are quite visible. And given our presence in that, it always makes us a very relevant player for those countries.
You've laid out a transition roadmap of how you see Honeywell evolving over the next few years. I'll ask you this in the context of what we're seeing with the advent of AI, generative AI in specific, etc. How much of that are you already adopting, incorporating into what you're doing at Honeywell? And what do you believe that could lead to in terms of efficiencies, cost savings, productivity uplifts? I mean, what are the assumptions that you're working with?
So to me, AI has a two-dimensional context. One is how do we use it for our own operation? And second is how we use AI into our products, right? Because you have to think it from both dimensions. We have been early adopter of AI into our operations for product development, product testing, customer service operation, HR operation. And I would say that what you read is generally, positive. If companies have a good processes and good data, definitely AI can help you drive more productivity, make your people more smarter. I actually look at it as more of a skill shortage issue.
Okay.
Because generally the segments we serve, now pivoting to the other part of my story and the customer, our customers generally find challenges to have skilled people to run their operations, maintaining the equipment, operating the plants, buildings, others. So one of the way we are thinking about is how we make our products simpler to operate, simpler to maintain by embedding AI into it. So making our products also autonomous to the extent possible. And that journey is going to help us to generate new revenue stream by architecting our products.
Okay.
And company like us, which grew as an automation company, we are also moving towards autonomy. And autonomy for us is not that things will become fully automated, but making people more empowered. You can use slightly lesser skilled people job class change a little bit. So I think we really get excited on AI use for our customer base.
So from this move from automation to autonomy, what does that then mean in terms of the number of people that you will have to employ, the kinds of people that you will have to employ as well in the future?
It will be more around you're able to employ people with a lower skill for a job which required higher skill. Essentially, it is making more labor pool more available. Let's take, say, we sell an equipment to a customer and typically we said, you need 10-year experience to run it.
Yeah.
But if we embed AI into a product and it can guide people how to maintain something, how to operate something, that experience level may go down to 3 to 4 years versus 10 years. So you still need that human, because human judgment in the industrial products we make will always be required. But the question is where the human judgment is required, and you want to basically eliminate repetitive work. So humans become more valuable for the work we are doing. So I don't see, at least in the segments we serve, this is a labor elimination. To me, it's a revenue growth opportunity. Because if people are not available, it's going to impact revenue at the end of the day. Or skilled people are not there, you can't run your operations. That's a revenue problem. That's not a, productivity opportunity is there, but not that's not such a substantial opportunity for industrial customers.
But what are you seeing in terms of adoption, at the client end?
I think people want to adopt it. I have not met anybody to say we don't want to do it, but like any other new concept, the adoption rate will scale once the proof points become more visible. So I think some segments we are clearly seeing adoption rates growing. So there's no resistance to adopt.
But everyone's weighing the ROI.
Weighing the ROI, want to make sure that they clearly understand the use cases and not very kind of running ahead of the curve, which I understand. But I would clearly see that if I have to see adoption of AI in industrial world we serve, like energy sector, buildings, aerospace, it will grow in a big way in 2025. I will say 25 is the year of AI for the industrial sector now. It's been in consumer sector, for probably 2 years, 18 months. We have been a bit of behind. We have to bring in the forefront on how we adopt it in industry.
And you believe that breakout moment is likely in 2025?
Because we are building more offerings. We are making it more relevant right now for our customers. So I think the excitement is coming into, more products are also becoming available. So I think all the things are coming together.
So given the fact that you anticipate or you expect or you hope for this being a breakout year as far as industrial AI is concerned, what could that potentially mean in terms of additional revenue for you?
That for us is that's a basis for us to continue to drive our growth, right? Because we need innovation into our offerings, so this is one of the innovation. So we do expect, to maintain our growth rates globally in 25 as we delivered in 24.
And feel confident about that at this point in time with the visibility that you have?
Yeah, I mean, we will do our earnings guide in a couple of weeks from now, so we'll share more details.
Yes. So this is the silent period in that sense. So you can't talk too much about numbers. But finally, it's been a little over a year for you in office in this role. What's been the big takeaway so far, and what are the things that you would like to get done in this year?
What has excited me is in my job is that how we turn a company of our size and scale to be more of a growth-oriented company. Can a large company grow at a high rate, 2 times GDP constantly? It's not easy. And that's what really excites me, to change the growth culture, look at new innovation, adoption of AI, energy transition, all these technologies, how it enable growth, and repurposing Honeywell portfolio through acquisitions, building more new products which enable that. That's what has been exciting me. So turning the company more outward looking versus more inward efficiency looking, and that change is what I'm really driving.
So M&A, likely growth opportunity in 2025?
We have been very active last year. We did 4 acquisitions in 2024. We expect to maintain momentum. Now you can't count a number, it'll be 2 or 4 or 3, but we continue to want to make addition. The reason is that we want to make our portfolio more growth oriented. Therefore, it's imperative for us to look for options where we are under-penetrated and want to make more additions into our portfolio.
So the headline for 2025 for Honeywell?
Headline for 2025 for Honeywell would be, I would say, moving from automation to autonomy. We enabling that for the industrial sector, that autonomy becomes a reality. I'm really passionate about it.
Well, passionate about moving from automation to autonomy, and you believe that it could be the breakout moment for industrial AI in 2025. Growth looks strong across the markets that they operate in, particularly in India, and the big headline that Honeywell is going to be looking at global sourcing from India in a big way and are moving towards setting up that supply base. Vimal, always a pleasure. Appreciate you joining us, and we look forward to seeing you in India. Thank you very much for your time. We will take a break, but the conversations continue here at Davos 2025. Don't go anywhere. We're back in a moment with more.